Hey everybody, welcome back. Well, another really wild day to say the least. So we're over 5,000 again. And what's cool about this is we're actually closing over that 5,000 repeatedly. And that's exactly what we want to see. Is it that higher high that you got today? Yeah, you really get the higher high. I mean, you're pretty much in line with it. So I'm not going to split hairs over it, but we are hanging in here and we are rotating through, which is exactly what we want to see. If you take a look at NQ, we're going to clean up all my 100 levels here. And we're just going to see how you popped right over, which is, it's really hard to not like this. You have 1.5% on RTY, which is the IWM. What is really nice about this, candidly, more than anything else, is we rode the line. So as we're riding that line, that's exactly where we want to be. That's exactly what we want to see, isn't it? And I really can't stress that enough. We really want to watch how we're riding that line. We really want to pay attention to it because you are riding the 55. Remember, I use a 12, a 22, and a 55. We have a bunch to go over. I want to show you a trading loss that I took and how I combated it and how I got out of it. I think it's really important that when we show the winners, you show the losers as well. I'll go through the trading journal, where we're at for February in the one account, because I got a lot of questions about that. And I just want to show it. And also, I think what's going on with student loans is really interesting. And we saw that in Ralph Lauren being up dramatically today after seeing ELF up as well. So we should probably talk about why Ralph Lauren was up 17% today. But if we take a look at RTY, look how we're riding the line right here. Very important to note things like that. And I think that it's worth our attention to pay really close mind to that. Like we're not breaking down, guys. We're just kind of went sideways here. So this big break that everyone was expecting, quite frankly, we did the other, and we're not having that follow through like I'm expecting. Now, maybe we're going to get some kind of relief bounce here. We are seeing other sectors start to take off. I mean, if we call Bitcoin a sector, we can say whatever we want about it, but you are getting that move off of that, 55-day, and you're popping right out off of that. It's really hard to not watch that. It's really hard to not see the MicroStrategies of the world, lifting and getting over the 55, or the Maras of the world getting over and pushing. It's really hard to not see that that's what's going on out there. Clearly, that's exactly what's going on out there. We're watching NVIDIA struggle with that 700. It's kind of funny to say that NVIDIA is struggling with that 700, isn't it? But of course, everybody's going to want to talk about ARM. This was a really great trade today. We did exceptionally well with this trade. If you watched last night's video, I was real clear on where we started getting in this. We started getting back in around here after NVIDIA's earnings call. And it's important to understand that it was the fundamental research leg of the stool that actually got us in this trade. And then the technicals just told us when. And then we just built the position. We had plenty of time to build the position. Candidly, nobody expected this. After the conference call, I thought it might actually break the 94. So what we did today was just watch. And we had some really great trades in it right off the open. I mean, it made life very, very easy for us to trade. Now, that was very different than what we did with the long-term position, because the long-term position was put on in the 60s back in November. But that didn't excuse the fact that you just had an amazing day trade right here. Now, there's an important concept that I really want to go over here, and I call it compartmentalization. So when I have a long-term account or a long-term position, meaning that we were in this for months, I usually don't put it in the same account as I do as my day trading accounts. And the reason for that is because I want to keep it compartmentalized. I don't want to look at it the same way. So that today at 10:07, when this popped up, the second ad, we had two ads. One was at 60, one was at 71. The one at 60, when he came out and he was on CNBC into that push, that was it. I looked at it and said, okay, we're up 100% on this since I think we showed last night. It was like mid-November. So we just blew it out, locked in half, left half on, and left the other portion on as well. But trimming into this had nothing to do with the day trade. The day trade was completely separate. This was a long-term trade. So I want to go through that concept because I think it's a really important concept. But that didn't stop us from doing day trades. So if you look here, this is right off the open. This is just John showing it out there. You look at the timestamps, you'll see we bought ARM right off the open. And we just started trimming it. And then as we trimmed again into it, as it made moves, we were just pulling money out the whole time because nobody knows that that's what's going to happen, right? You never know what's really going to happen. So what you're doing with it the whole time, you're just trimming and you're just playing the game. And you can see here at 9:43 how we bought ARM again after it kind of went sideways, set up right in here, and then popped out. We just got right back in again. And we had another great trade out of it, pulling even more money out. And that was the game. That was the game that we were playing all day long. And you can actually watch that in this clip right here.
There it goes. So they're going to try, see what happens here. Let's say they should push it. All right, bought some more, trimmed. That low of that bar is my stop on the rest of it for now. There he goes. Boom, right through. Perfect. 101, right into it, trim, up 4, under 100, I'll kick the whole thing out. All right. I still have my long-term position, and I'll let it set up again. I don't know how we're going to do it, that 153. That was an issue. So I took it. I'm out. I'll come back to it. It very well could just rip again, guys. I still have the long-term. But that for the trade, that was easy money. Arm's going to rip again. It's a nice wick right there, too. They're probably going to jump that. 101.91. It's your issue. 105 after that. It'll trade up 10 o'clock. It'll trade into that. If that guy's on TV, it'll trade up into that. They're probably going to push again here. If you're not going to break, you're going to push. Yep, they're going to push, I think. It's by a little bit. See if we can catch it again. All right, trimmed into that. There we go. Another dollar. Trimmed into it. Just hold the rest for now. See how crazy it gets? Perfect. Right into 105, I'm going to trim, and then I'm just going to hold some. Yep, right into that. Boom. All right, now I'll hold the rest. So all I did was just trim into this level with the other name, and then I let it consolidate, show me it was going to go, and then I just added it back, and then I sold right into that, and now the rest I'll just leave on at whatever my cost is. No need for me to do anything with it today. And then after this guy speaks, it'll probably get hit, and then I'll find another way in. You need to hold 105, so you're breaking. I'll hold that until it breaks even, then I'll kick the rest. I don't think it's going to break, though. I think it's going to build there. Arm 109. Let's do it. Boom. Trimmed right into it. Wow. It was 105, 10, I'm now 15 already. That's too much. I'm out. Trimmed, out. 100% out of that day trade. Paid $10 on the second ad. I'm getting close to trimming 50% of the initial ad on the long-term account of ARM. I'm up almost 100%. The secondary ad, I'm not going to trim any of. That looks like you're going to go again. It's not ready to push again. It's not ready to break out one more time. Just did. They're going to take it right through 120. Just like that. Boom. There it goes. That was fast money. Well, it was a quick $2. That's a really quick scalp. Jeez. What's he saying? They're going to reinvent the wheel. So we have 2 ads in the long term. I trimmed the initial ad. 50, we're up 100%. The secondary ad of that long term, I have not trimmed.
So I hope you found that helpful. Now, if you noticed that lesson, let me pull this down just a little bit here. But if you notice that lesson, that's the same exact lesson I showed you the other day. It's the same exact one where I said we sell into the slippage. It's the same way I showed you those 3 trades that we did. We're doing it into the slippage. So by doing that, are we going to get the high all the time? No, you're scaling out. But the one thing you always know about these kinds of trades is by the time the CEO is on TV telling you how great things are, there's no one left to buy. The last person that buys is the guy that watches the CNBC TV show. And then by then, that's usually the end of it, right? But you want to scale out into this because you don't know. You don't know if you're going to break here. You think you know, but we really don't, right? So we always want to be in control of the trade. So we're always scaling out of it. And then we're kind of going from there, right? And then forward, ever forward. You can always add back. I added back a couple times today. You saw a couple of those. There were a couple, frankly, I added back and it just didn't work. There was a time in here where I tried it. I tried it again in here. This worked kind of, but then towards the end of the day, I thought I saw something where it might push and it just didn't. But when you're having a day like this, it really didn't matter if you're losing like a couple bucks here and there. It's kind of irrelevant, quite frankly. But my thought was that they might want to try to run that into the close, but they had other ideas and they had other names that they were interested in. Now, the one phenomenon that we're seeing a lot, and I think this is a really important thing to take away from, is like Ralph Lauren crushed. Now, I thought that it would be good. I didn't think it'd be this good, but it was just straight up buying all day. And when you're starting to see this kind of stuff, well, this is really significant. And these very simple trading patterns here, I'll just show it to you. Now, it's something I did a real small trade on. I didn't pull a lot out of this today, a couple bucks. And the reason for that was, frankly, I was really hyper-focused on a lot of these semi-names. That's where the juice was. I didn't expect this to do what it did, candidly. But once you flipped and you went, you could see like there was some easy money just made following this little trend line right here, flipping that little doji, and then from there pulling out a couple dollars. But why are these companies doing so well? Well, the one thing we keep hearing about is debts at all-time highs. Student loans are at all-time highs. But they have disposable income. So I saw a comment on some research this morning out of one of the investment houses. And so I read it. It was one of their top 10 points of the day. This one firm does like top 10 points, right? And so I'm reading it. And then I went onto the Fred website and I downloaded all the student loan data myself. And then I looked at all the commercial loans myself. And I'm kind of shocked at what's happening with commercial loans and everything and what's happening with student loans. Here, take a look at this. Now, one of the things I saw today when I was going through research is, and every day Goldman comes out with like a top 10 list, things that they're looking at. And I thought this was fascinating because I was not aware of this, but it fits into what's going on in retail, which we should be talking about. But it explains Abercrombie and Finch. It explains ELF. It explains Ralph Lauren. Student debt was down $37 billion last quarter compared to 2022. This is Fred, and I guess the Daily Shot put it out as theirs. Maybe they changed the color of the line or changed the graph. I'm not really sure, but nonetheless, I just screenshotted it because it's easy to show this. But then what I did was dive into these dates. So you can see how they're making this look pretty big, right? And it is big, but is it really that big? So I go to the Fred website all the time, and that's right here. This is a free website, and I just want to be everyone to be aware of this. So it's Board of Governors, Federal Reserve System, FredSt.LouisFed.org. You can go and pull this up all your time, anytime, I should say. And of course, this fits into what? This fits into exactly what we talk about all the time. With the stool, you have macro, you have the fundamental, and you have technical, right? And then you have your stool right here, and this is how the world works. Okay. So it is important to understand this if people have these loans or don't have these loans. So what are we seeing here to start with? Well, consumer loans in 2019, right? And then look at what happens. You have the pandemic, they sell down, and then they go higher. Well, everyone's going to say, well, they just exploded. Well, yes, of course they exploded because that's what loans do. They just constantly go higher. But if you take the top here, and then you take all other consumer loans, automobile loans, all commercial banks, and then you mark here. All right. And then from there, we have this difference from 520 to 490. Well, that's not a bad spot to be, right? That is a huge drop, and this is in a year. So when we talk about that the consumer is bogged down with debt, or the consumer is really strapped, or interest rates are here, or defaults are up, maybe, but at the end of the day, we're down substantially on other consumer loans, automobile loans. Now, if we take a longer term outlook, we can see the 360 right here. I went out about 10 years just so you could get a sense of it. And then we just, again, see right here. So where are we? Well, we're right back to where we were in mid 2021, and we're still dropping. And I just have the tabs right up here. That's all I'm clicking through, so you know exactly what I'm looking at. They're directly from this site, and this site is free. And I like leaving this stuff up so that you guys know exactly where it's coming from, so you can go and get it yourself. Why am I showing you this? Because one of the things that has really struck me as odd is we keep hearing how tough it is out there for the consumer. And I'm not saying that it's not. I'm not saying that it's crazy that a taco's $20. But debt is coming down. Now, maybe debt's coming down because people are looking at this going, we can't afford this kind of debt anymore. We got to get rid of this, and we have to start stashing it. And maybe that becomes an issue later. Okay. That said, if we take a look at student loans owed and securitized, and we look at it on $1 billion. So what I did with that one graph that they went into, I actually looked at the data, the actual raw number. And sometimes I like doing this because, yeah, it doesn't look as cool on a graph, right? When you go out there and you show that disparity, but it shows you actually what's going on, right? So let's call that 17, you see here, 1760, just call it 1780, like you're in the middle there. And then you kind of go from here and you draw right there and see 1725. And you see the drop right there, okay? So that's what you're down, and you can see from when are you down in there. It's kind of interesting because this is really, if you take a look at this particular spot on student loans and securitized, if you really want to go back and take a look at when we put a bottom in the market, it's kind of crazy, but it's really around there, right? That's right when what happened. We had peak CPI, if you remember that October number of peak CPI, and look at where this is. So I just thought that was kind of interesting. If you remember that spot in October, I put out a tweet. I said no one's going to ring a bell, and obviously that you looked at the RSI and it made sense now. But I thought this was interesting going back to 2019. So as long as this drops, it seems that we have the consumer in good shape. Click over, and this shows you 10 years. Now, if you look at 10 years, you're going to be like, yeah, but, and agreed. Believe me, agreed. Massive issues with this, but if we look at this right here coming across, and it's crazy what they want these kids to pay in interest. So it really is, to me, it's staggering. Very different than when I went to school. But look at that. Okay, is that great over 10 years? It is, but it isn't. And so for me, this is really important to understand because this is really what's driving retail right now. And I think this is a very important distinction. Now, that's not something that I expected to see, quite frankly, when I dug into it. But that explains why you're seeing Ralph Lauren act the way that it does. ELF, you can see that little turn after that big meltdown the other day. And here we go again. It's going to start lifting. ANF is one that we've been in and done exceptionally well with. People are watching AEO. And again, these names are just all setting up. They're all breaking out, and it's specialty retailers over and over again. We have guys in the room that are trading this one. I'm not in it, but this looks beautiful. I don't know who's buying $300-$400 pots and pan sets, but apparently somebody is. I think that's what it costs for like one piece of those things. But you see where I'm going with this, right? So you have that disposable income. Then you look at auto loans. Well, auto loans are in awful shape because that's a 3-bar pattern and you broke out. I had way too many names that I was trading today, and I really liked this yesterday. I took a position, and I just closed it out yesterday. And that's kind of one of the other things you guys have to remember about all this, where when you're trading names, you're not going to catch them all. And sometimes you're going to take losses and they're going to go higher. That does not mean that you change your thesis on a name, right? It just means that that's the game. And not everyone's going to be a winner. Now, one of the comments I got a lot about winners and losers was when I showed the trading journal. People really like to see that. So I want to show you an example of me taking a loss in this name and then this name going higher. And you can see that my larger concern was the P&L. It had nothing to do with just this one trade. So we got some good feedback on showing this trading journal, and I just want to walk through everybody through things here. I want to go through a couple numbers up here, but I want to show a losing trade and then how I handled it and go from there. The important thing about these trading journals is to understand the data and then how you can use the data for yourself. So let's just start right here. This is where we are for February. It's been about a week of trading in February. I don't know how often I'm going to do these. I'm going to do them as often as it makes sense, but this makes sense right now. So you can just see that we're actually following through the same time period, roughly. So if you come here and we go and we click here, and we go January to date, right? And we're going to pull up a number. And you see 1.67 up here, right? Profit factor 1.98. Okay. Now, if we click over here and we go February, what you're going to see, and you can see the numbers right in here, right? See where the win rate is, the profit factor is, the trade. So everything's pretty much in line, and maybe this reverts back down to that, closer to that 2, and this profit factor drops and the win ratio drops. But maybe it does, maybe it doesn't. You never know. But the goal for me is always, and I want to be clear about this so people get it, if I'm between 50 to 60%, I'm killing it. I'm absolutely killing it. Why is that? Because I'm cutting my losers so much faster, right? So if every time you touch the computer, you were going to hit 50%, and every time you made $1,000, and every time you lost 463. If you did that every single time, you're set. There's nothing for you to worry about it. You have it down. All you're trying to do is just extend the profit factor. And quite frankly, that starts becoming really a function of the market as a whole. And you can just see the application right up here with the start date and everything else in there. I did state very clearly that I would just drop time in sales as well. I set up a Dropbox account so I can actually drop the entire drop time in sales of this. But this is where we're at for the week, and then you can kind of go from there. It is what it is, guys. Ups and downs in the market always. But you can see some of those other trades that we did where we killed it. And no, you don't always have months like this. Sometimes you're going to have losing days, as we talked about. Not every day is going to work. Also, this account is one account that I trade. It's not all the accounts. So this account is tied, for me, towards our Alpha Chasers community. And then what I do is I'm pretty aggressive in this account with positions. And based upon the amount of money that's in here, et cetera, et cetera. But if we go to Monday, and this is really what I want people to focus on, my worst performing trade, I'm pretty sure, was not the MSOS, because I carried that over just to see what it was going to do. And it didn't do what I wanted it to do. So what I want to do here is just focus on this. So everybody liked PLTR. And I saw a pattern that I really, really liked right in here. And you can see right here, 8,000 shares. But let's just drop this here for a minute, and then we'll zoom into this. So what I did, I saw something, and then in a minute that it reversed. So I saw this break, and I saw that wick, and I saw the close over that wick right there, and I saw it on this volume, followed by that volume. And so I wanted to get involved. It looks like we bought 8 right in there at 96 cents. The next bar. The next minute, it popped over and it rejected. And the minute it rejected, I closed half. So I reduced my risk by half within 1 minute. I'm going to be really clear on this. If you take one thing away from tonight's video and learning and watching this, and it's really important to watch losses and how you handle them, you want to look at 3 different kinds of stops. The kind of stop we're going to go over tonight, I'm not going to go over all 3, but the kind of stop here, this is a time stop. You need to look at how long you're in your losers versus how long you're in your winners. That's very important, right? So I close here, breaks the neckline, and what my plan was I was up to 8, blew out half. I was going to scale into the other half. And then when I started breaking what I considered levels that I really didn't want to break, I'm like, you know what? I don't want to play with this thing. I really don't. I'd rather move on with my life. I had too many other things that were working, so I closed it. So that's really important for us to get. And I really want people to understand that. I can show winners too, but we do that a lot. I think it's really important for people to look at just some of the losers and how you handle them. You want to look at a time stop, how long you're in a losing trade. So that's one of the lessons you should take from this. The other one, you constantly want to monitor your win ratio, right? And then you want to take a look here, make sure your trade loss, you want to see that you're in line with where you're supposed to be. So let's say you do a week of trading, which is what we have right here. What I like to do, and I measure everything, that which you measure gets results. It just does by definition. If you don't measure things, you're not going to get results. So if I go here, you see we're up like 121, great. But see where the win ratio is? So the average win ratio on the year right now is 55.23%. Trade expectancy, every time I touch the computer, I make $290. Profit factor 228 to 1, 1.85. But if you dig into this, you can see that you're currently on this week, you're a little bit ahead of where you are on the year. So it's going pretty good. So that like 2% extra, that makes a big difference, believe it or not. So you don't need this wacky number that people keep talking about. As I said in one of the other videos, Steve Cohen, one of his best traders, is like at 61, 62%. That's incredible. It's absolutely incredible. So there's a really large, and we'll get into this in another video, but on the win ratio, every percent over 50% that you get, your account goes up exponentially, right? So you're fighting for inches. You're not fighting for feet. Just keep that in mind. Hope this was helpful. Please comment on this and what else you'd like to see when I show these kinds of P&Ls and trades that work and trades that don't work. That's not something that I expected to see, quite frankly, when I dug into it. But that explains why you're seeing Ralph Lauren act the way that it does. ELF, you can see that little turn after that big meltdown the other day. And here we go again. It's going to start lifting. ANF is one that we've been in and done exceptionally well with. People are watching AEO. And again, these names are just all setting up. They're all breaking out, and it's specialty retailers over and over again. We have guys in the room that are trading this one. I'm not in it, but this looks beautiful. I don't know who's buying $300-$400 pots and pan sets, but apparently somebody is. I think that's what it costs for like one piece of those things. But you see where I'm going with this, right? So you have that disposable income. Then you look at auto loans. Well, auto loans are in awful shape because that's a 3-bar pattern and you broke out. I had way too many names that I was trading today, and I really liked this yesterday. Took a position and I just closed it out yesterday. And that's kind of one of the other things you guys have to remember about all this, where when you're trading names, you're not going to catch them all. And sometimes you're going to take losses and they're going to go higher. That does not mean that you change your thesis on a name, right? It just means that that's the game. And not everyone's going to be a winner. Now, one of the comments I got a lot about winners and losers was when I showed the trading journal. People really like to see that. So I want to show you an example of me taking a loss in this name and then this name going higher. And you can see that my larger concern was the P&L. It had nothing to do with just this one trade.